weekend all. Ira Epstein with your agriculture weekend wrap-up, and this will be your edition that covers the one monthly chart and weekly charts for the week ended September 20th, 2019. Well, you know, we're always one tweet away with our president from something happening, and it happened again. He was today with the the Prime Minister of Australia, and out of nowhere, I'm listening, and we started hearing, well, you know, we really don't want to do partial deals with the Chinese. We want a whole deal. Beans down 10 cents. Now the Chinese are saying that they're going home earlier. They're not going to go to Montana, where they had set up to meet with some, on a goodwill tour, if you will, with some ranchers. That's over. I don't know where we're at. The stock market, it's triple witching day, so you've had them all down, but I think you took the oomph out of the market. You put all of a sudden gold up $17. Now, it won't settle there. Remember, settlements come in at 12:30. This all happened after that, but the gold responded later. You can see how silver's come back up really 15 cents. The dollar gained a little bit, and a mixed bag in the currency markets. I'm telling you, every time he says something, I never quite know where it's at, but I have to think that these 2 days didn't end up where we were all thought we were going to get these small little deals, which nothing wrong with that to get onto the big deal. I was let down. Before we get into this part of the chart completely, let's talk about the cattle on feed report, and then I'll come back to these charts. It came out with a on feed 99%. They had estimated 99. The prior month was 100, so we got about the same amount they thought. It's the placements that are down. They're down to 91% from 95. So the back months, not the far back, I'm talking the current month, a little back, the D's cattle and so on, probably a little bit of a friendly number for them. The marketings didn't fall. They were 98%, right what they estimated. Now, they did fall from the prior month, but the market was already thinking that number would be down. So now, in the bean market, one of the things we've been talking about is this market not having been over a monthly 18-month moving average of closes since back in 2018. That is still the case. You got pretty close to it. You finished off at 882 and 3/4. 890 and 3/4 is that number. I wonder what would have happened had we not heard that from the president. Very interesting, but we did hear it. When we take a look at a weekly bar, we can see that the market got all the way up here into this $9 area, a resistance zone. Do you agree? You can see all the weeks that it spent there, and it finished lower. So I think you're going to look at disappointment out of this. When I look at the pattern, I still have a pattern of higher lows and higher highs. So in terms of the market having some support, it's certainly there. In terms of pulling the rug out from under the market, if this deal with China absolutely goes nowhere and we find that nothing's right, big problems. I don't know what to make out of this because we don't know enough yet. In terms of resistance, one of the resistance points above the market has been the 100-week moving average of closes. The 18-week average of closes is here. So, in simple parlance, you have a higher high, higher low pattern, and the market settled over the 18-week average. The bias is up, as I determine bias by the settlement price in relation to the 18-week moving average of closes. It's over it, so the bias is up, and the swing line is up. That's bullish. Resistance, you can see the 917, this green line, which is the 100-week moving average, and the upper Bollinger Band at 918.5. So we have a pretty good idea of where resistance is. Momentum. Momentum has been pointing to the upside. So we have a market that's acting bullish, support back at 873. What you don't want to see taken out in the market is the 839 and 3/4. I'm not saying that would turn the market bearish. It would destroy the bull pattern, though. That I will go on record of saying. And when you move the Bollinger Bands next week, they're going to be up on you. They're probably going to be closer to 838, 837, very close to that low number. So even getting under it, you're going to be right into a Bollinger Band support zone. In the meal market, if we take a look at this week's high of 299.30 and come back to here, this number was 298.30. So now what we have is a market that's got a lower low and a higher high. not a trend. Momentum is still staying to the downside. The market that, if nothing good happens with China, that I think would get hurt would be the meal market of all the markets, and that would obviously be because what kind of trade are we going to do with them? And that becomes your bigger problem. And of course, we already know that they have problems with their hog herds. We know that around the world we've got this African swine fever, not a good thing, and it stops demand, and meal is a demand for these animals. In the oil market this week, and I'll take it back here to last week, if you rallied, you have the potential of the upper Bollinger Band, and you have the potential of the 100-week average. These arrows were already up. You had higher lows and certainly a higher high. This week you did do that. You got right up, hit the 29.75 area. Guess where you finished? 29.28 under the 100-week and the Bollinger top. So that combination offered what we thought. It offered the resistance point. So this is the bull part of the soy complex. The beans themselves aren't. Not really. They're holding in a more bullish than bearish pattern. I agree. Meal's not doing anything. This is still the more bullish part. In the corn market, we had come all the way down last week into this 340 area. We rallied back up. Now, the 100-week average on the way down didn't really offer much support if you look at it. This market closed 371, close to it, but normally when I say support, it's going to come back and hang at it. It didn't even do that. On the way up is where it's showing its merit. So now it's stopping at it, and that's good news. At least the technical indicators, other people are seeing what we are. The trend is down. Resistance could come in between this 372.5 up to a 30-cent range to the 18-week average of closes. In the wheat market, as long as prices stay under the 18-week average of closes, the bias is down. Is the market trending? No longer. When you came up last week, you had taken out the pattern of lower highs and lower lows. So your first resistance, you would hit the 100-week average. If you're going to climb from here, I would think the 18-week average could offer resistance along with that 18-week. And that's about all that you've done. Not trending in a resistance zone. Cocoa market continues the assault to the upside. Higher lows, higher highs, and this is the first week it's been able to close over the 18-week average. You went into it last week. I would have expected the 100-week to offer some resistance. If you take a look at the close, it's 24.73, and that's well over this 23.69 18-week average. So you might have hung there for a day or two, but you've managed to move away. Momentum is up, bias up, trend up. Got a group of people caught here in pain. Sugar market is still in a downtrend. You've got on the weekly charts lower highs, lower lows. Now the resistance comes in at the 1181 mark. The October sugar is now starting to lose its open interest and volume to the March sugar. That'll be the next contract that takes over. Keep your eye on momentum. If the red line gets up and over 20, it's turning the bias, well actually the momentum back to the upside, which could put the onus on the market into resistance up here. Nothing yet bullish on the market on the weekly chart. Now let me show you Heartbreak Hotel. And this is what I mean. Here you are with coffee, and for the first time in a while, it's closed back over the 18-week average. This was last week, and things are looking good. If it rallies, I'm looking for resistance, maybe at the 100-week average, if it can get a momentum. It's pretty far momentum, to the upper Bollinger Band. The market gets all the way up. Guess what it did by the end of the week? You're back underneath the 18-week average. Pain. Cotton market, all you've done is negated the downtrend. And this week, this was last September 6th, all right? Market had a pretty clear pattern, lower highs, lower lows. Momentum was still down. This week it stepped out of the downtrend. The market's now got a pattern of a lower low, higher high, and it went up to the 18-day average last week, and now you're just settling back from it as the market's trying to figure out what next. And I'll tell you this, it's probably as concerned as everybody. What just happened today with the Chinese delegation in the U.S.? I think we're going to hear about it over the weekend. In the cattle market, as I said, we have a cattle report that I could say for the D's contract might be a little bit of a bullishness with the not as much cattle being put into the lots. You've been in a downtrend. You've hit the downside target. You're fighting at it. Now we'll see if new fundamentals have anything to do. The 18-week average is going to be the resistance point. In the hog market, you've been coming down. You've been going sideways here. Again, is this market going to unfortunately get a big disappointment? It could. I don't know what happened today, and we'll find out over the weekend. So as we look at everything, an interesting day, disappointment in many areas. Let's talk about how I try to get you going in the morning, because to me that's what trading's about. Nobody can be right all the time or wrong all the time. Honestly, I've never seen anybody always wrong. If I knew that person, I'd be able to take the other side of trades, right? Or not trade with him, just say, okay, you're buying, I'm going to sell. You're never right. It doesn't work that way. You put a lot of effort into what you do. You try to think about it. You'll wake up sometimes, or you're driving home and you go, I'm looking at this market. Maybe I should get involved in it. Well, what I do is I start off in the morning. I do a review. I begin typically 4:35 a.m. And I'm reading about what's going on in Asia, Europe, and I'm briefing myself up again for the morning reports that are coming out. As I do that, I start sharing with you events. I'm going to tell you what's going on in the marketplace, what technicals I'm seeing in the charts, and unlike what I do and what you're seeing right here, I'm going to say buy here, sell there, do this, do that. Profit objectives, trade ideas. You take with it what you want, but it's like sitting next to me and I'm talking to you and this is what I'm seeing. Now, the first thing I realize is I'm going to cover all these markets. You don't want to know all these markets possibly, but it's easier for me to make one video doing them all, go in sequence, but then what I do is on the slide bar on the bottom, whenever you watch a video, you see that. You're able to pull it and it lights up. So if you're in the meats, just pull it to where it says meat markets, grain markets. Going to play right for you doing that way. Also on the side on our webpage, it'll have those sections. You go right to them and away you go. The idea here is I want to save you time, but I want to throw ideas, and I have a large pool of subscribers. Not everybody trades the same thing. At the end of the day, to me, a chart is a chart. I'm not a fundamental trader. First of all, if I traded the fundamentals, I wouldn't know what enough they are because they move much slower than the marketplace. The charts are moving every second because of human nature, because of different things that are going on in the marketplace. But is there really any reason that Apple changes every 1 second in trade? It's because somebody thinks it's high, somebody thinks it's low, somebody wants in, somebody wants out. I cover that on the charts for you. But I throw it in a way with my 50 years of experience where I think you can understand it. I make it easy to get around. And I price it in a way that is really competitive for you. What do I mean by that? Let's assume you're a corn trader. A penny in corn is $50. A quarter cent is $12.50. That's the smallest tick. For my introductory price, $7.95. That's 26 cents a day over a 30-day period. If you want to stay with it, it becomes $15. And you can buy when you're on our website over the weekend. You'll see the 1-year subscription. That's $13 up front per month, and away you go. So if you think the money's the problem, well, it isn't. The question is, can I help you with ideas? And that's what this is all about. I'm Ira Epstein. Just go to our website under the word research. You will see Ira's morning subscriber video, and away you go, and you can click right up here as well. This is going to take you right to that area if you're watching me on YouTube. Have a great day.